What if I told you that right now, behind the noise, FUD, and volatility, Bitcoin is quietly preparing to mint the next wave of millionaires, but not in the way anyone expects? For over a decade, Bitcoin has been dismissed by many as a passing fad or a playground for gamblers. The headlines have always favored drama, wild price swings, lost fortunes, speculative mania. But beneath the noise, something far more profound has been unfolding. Those truly paying attention have recognized that Bitcoin is no longer just digital gold, nor is it simply a volatile asset to be day traded for quick gains. It has matured into the backbone of a decentralized financial protocol, quietly powering a shift in global economic power that most still fail to see. In 2025, this hidden transformation is no longer just theory. It's playing out in real time, but not in the places most expect. The era of retail-driven hype cycles is fading. Instead, the world's most influential players are quietly stepping onto the stage. Multinational banks, sovereign wealth funds, pension systems managing billions, and even central banks themselves are moving beyond mere curiosity. They are now integrating Bitcoin directly into their portfolios, infrastructures, and long-term strategic planning. Consider a few of the most recent developments. Standard Chartered, a global banking giant, has broken new ground as the first major bank to offer direct spot cryptocurrency trading services for institutional clients, beginning with Bitcoin and Ether. This isn't a marketing stunt. It's a signal that the world's financial titans are embracing Bitcoin as part of their core operations. Bank of America, not to be outdone, has signaled its intention to launch a stablecoin, reflecting a sweeping trend. Traditional banks are no longer resisting digital assets. They're building with them, alongside them, and on top of them. But the most telling sign of this tectonic shift is the explosive growth of Bitcoin-backed financial products. In 2024, the approval of spot Bitcoin exchange-traded funds, ETFs, marked a watershed moment. These funds, fully regulated and accessible through traditional brokerage accounts, have amassed over $125 billion in assets under management by mid-2025. That number is staggering, rivaling the gold ETF market in less than a year. What does this mean? It means that the world's largest pools of capital, pension funds, insurance companies, endowments, are now able to gain direct, regulated exposure to Bitcoin at scale. No more clunky wallets or risky self-custody. Bitcoin is being woven into the fabric of mainstream finance. Yet, the story goes even deeper. Some governments are no longer viewing Bitcoin as a threat or an experiment, but as a strategic asset worthy of national reserves. In March 2025, the United States established its own strategic Bitcoin reserve, leveraging coins already owned by the federal government. This move positioned the U.S. as the largest state holder of Bitcoin, signaling to allies and rivals alike that Bitcoin is now considered a pillar of economic security and sovereignty. Pakistan quickly followed suit, launching its own government-led Bitcoin reserve and harnessing surplus electricity for mining and AI data centers. These initiatives are more than headlines. They are a clear recognition by nation-states of Bitcoin's unique power to store value, generate wealth, and underpin critical infrastructure. All of this has unfolded in the wake of the 2024 halving, a moment many believed would be the final catalyst for a new bull run. But the real story has been what's happened after, a period of quiet accumulation. Retail interest has faded. Fear has returned as prices appear to stagnate. But beneath the surface, a liquidity trap is being set. Smart capital, the whales, institutions, and governments, are methodically building their positions while the rest of the world looks away. They aren't chasing headlines. They're preparing for the next phase, a phase where Bitcoin isn't just an asset, but a protocol upon which new forms of wealth, power, and sovereignty are being constructed. The next generation of millionaires won't be defined solely by how early they bought Bitcoin, but by how they build on top of the Bitcoin rails. Earning yield through decentralized finance protocols, operating Lightning Network nodes for microtransactions, investing in tokenized real estate and fractionalized assets. All of these are now possible on Bitcoin's expanding infrastructure. The opportunities are not just to hold, but to participate, to create, and to become a stakeholder in an emerging Bitcoin economy. This is financial foresight, not financial advice. The value of Bitcoin in this new era will not be measured simply in dollars, but in the degree of sovereignty, access, and leverage it provides. As governments regulate, just as they once did with the internet, adoption only accelerates, and innovation flourishes within the framework of clear rules. The narratives of restriction and limitation are giving way to stories of integration, expansion, and empowerment. While mainstream media obsesses over price volatility, the true revolution happens quietly. Bitcoin-backed mining pools are leveraging renewable and surplus energy, transforming grid economics and creating new revenue streams for communities. Global remittance systems built on Bitcoin are bypassing centuries-old networks like SWIFT, delivering instant borderless payments to families and businesses around the world. Sovereign nations are using Bitcoin reserves not just as speculative bets, but as tools for international trade, economic resilience, and technological advancement. The infrastructure for the new Bitcoin economy is being laid brick by brick, protocol by protocol, often out of sight of the public eye. But history shows us that the greatest shifts rarely announce themselves in advance. By the time the headlines catch up, the opportunity is already in the rearview mirror. So the question is simple. When the next wave of Bitcoin adoption becomes obvious, will you already be in position? Or will you be reading the headlines, wondering how you missed it again? The era of passive holding is giving way to an era of active participation. Bitcoin is no longer just a coin. It's becoming a global economy. Those who recognize this now, who build, participate, and accumulate while the world remains distracted, will be the ones who look back in 5 years and realize that this was the moment everything changed. The next chapter of Bitcoin is not about speculation. It's about creation, sovereignty, and the quiet birth of a new financial order. The question is, will you be a spectator or a stakeholder? The choice, as always, is yours.